And it looks like the pandemic really triggered this because you were waiting for a recession to happen to really go all in on crypto.
Yes, I was waiting for the macro to meet this crypto market where it became obvious to everybody that crypto offered a big solution.
So why do you think crypto is the answer to the recession? Like,
it's not the answer to the recession. It's the answer to the future of the financial system as a start, just as a small start, is the fact that in a debt-laden society, everybody owes everybody money. And when things go wrong, you don't know who owes what to whom. And that's what happened with Lehman Brothers and many of these other things, is we don't know who owed what because there's daisy chains of all of this debt. Blockchain solves that. You know immediately who's the owner of the asset.
Why increase your exposure so much so that it like even trumps Bitcoin?
Okay, how do you value Bitcoin and Ethereum? So we've had the stock to flow model, but really what it was to me was also a network. And you use something called Metcalfe's law to value a network. Adoption of Ethereum was much faster than that of Bitcoin at the same stage. And then you start realizing the number of things being built on it, the applications, the number of developers involved, and the speed of the increase of the number of users. So there's a lot of interconnections plus a lot of users.
I'm really interested in kind of how you're looking at all these applications that you've mentioned that are being built on ETH, DeFi, NFTs, social tokens. Are you investing in these, testing them, playing with them? Like, what's kind of your experience with these applications been like?
So DeFi, I've invested in some of the protocols, but I have not used DeFi. I'm not really a yield guy. I don't really care about yield. I'm a more macro guys tend to be price appreciation people. So I tend to look for those opportunities more than I look for yield. Social tokens, NFTs, I've invested in some of the NFT platforms, but the social tokens, there's not many of them around, but I've invested in those too. More significantly because I think they are, maybe not even for this cycle, but I think they're going to be a huge part of the global business model going forwards.
I'd love to just like hear more of your thoughts on like how, like you have this like whole framework to value ETH and Bitcoin. So like what do you use to value social tokens?
Networks. It's all the same. Everything is the same trick.
Right.
So let's say you are Disney. How many fans does Disney have? What is their community? How does Disney access their fans right now? They have to rent them back off Facebook, YouTube, Google, Apple Music, Apple TV, Spotify. You know, they have to rent them back and pay away economic. But what tokens do is give them direct access to those fans because you now have a relationship where that token is the currency of the Disney world. So I can buy things, and if I happen to be a currency owner, I can get things at a discount. I can get certain access. I might get to see the film a week early. I get so many benefits that I value as a fan. And I might get Disney Plus at a discount. And if I renew my Disney Plus every year, maybe I get more tokens. And maybe I can build a business of selling Disney T-shirts and I charge them in Disney tokens and people start building businesses. So you build a whole economy around Disney, of which there is one already. It's huge, giant. But what's the difference here is as a token holder, I now share in the economic benefits of that community. So if the community becomes more valuable, then I make more money. My token goes up. It's an asset. So culture becomes an asset that you can invest in. This is game changing. And once you think that through, you realize, okay, well, where are the big tech players in all of this? Do they understand it yet? And it's very simple. It's in front of our eyes. It's Facebook DM. They've created, not only is it a stable coin to allow global commerce on their platform of the biggest network on earth, 3.5 billion people. And if they do it, well, probably YouTube has to do it and Spotify will do it and Apple will do it. So it's coming. People just can't see it yet. People only look at today and say, Well, NFTs are about art and social tokens are for small YouTube influencers. This is just the start of where this is going. I spend a lot of time in this space, and I'm having conversations with all sorts of people. And this is on the radar screen of every media company, every talent management business, every record label, every major brand, particularly fashion brands, that they get it. The one thing in crypto that most people don't understand, and I think it's the one thing that is going to be bigger than all the other applications. Sure, the plumbing of the financial system is big, but I think what is coming in these communities and NFTs and everything else is far bigger.
Oh, interesting. So you think community tokens, social tokens will be bigger than DeFi?
Oh, yes.
Wow. You think there's more potential there than like replacing banks?
Yes.
Why so?
Banks are one business model. This is every business model.
And talk about the environment that you're seeing now. I read something you said about the second half of this year that you expect it to be weaker than expected. A risk-off kind of positioning, dollar up, bonds like U.S. Treasuries up. Is that like still your view? And if so, what does that mean?
Every single recession since 1962 has seen exactly the same thing. Bond yields, as soon as you come out of the recession, everyone goes, oh my God, inflation. Bond yields go up. And then what happens is the stimulus that the government and the central bank has put in during the recession starts wearing off. And bond yields fall because growth starts slowing down again. And every single time, the central bank has had to stimulate 2 or more times after the recession to find the natural rate of growth, because all this stimulus keeps coming in and then coming off. The government usually stimulates again a couple of times until the economy gets its traction. So this would be really normal. We've just had a massive spike in house prices, a massive spike in the cost of food and fuel, and all these supply disruptions. So real wages have stayed flat. Well, they've actually gone negative. But wages have stayed the same, while costs have gone up and mortgage rates went up. And usually that slows things down already. I think that we're going to see everybody was like, no, this is going to be inflation forever, growth forever. I think same as every time I've ever seen, it will slow down first and give us a scare. And we might even see one of the emerging markets blow up. That's usually what happens. What you should be thinking is, what was the outcome of March 2020? Massive central bank stimulus and government stimulus on a scale of which we've never seen in our lives before. So let's say there is a risk off. Okay, it's not as big as March 2020. Maybe Bitcoin goes back down, breaks a new low of this move and gets to 27,000, whatever it is. And let's say equities are down 10 or 15%. And the dollar's going higher, a lot higher. And that's making the markets feel uncomfortable. And we start to see the data slow down. What is the outcome? The outcome is exactly the same. The central bank will stimulate more. And the government will try and push through an even bigger stimulus package. What does that do for Bitcoin? Explodes it higher.
Go back up.
So the first order effect is, oh my God, Bitcoin's going lower. But everybody should be thinking, if this happens, then this is what's going to drive it to 200,000.
Seriously? Is that kind of your target for?
Yes, my target still remains between 200 and 400,000.
For like, in what time?
Probably the next, I think the cycle extends somewhat. So I'll give it the next 12 months.
And for ETH?
At a minimum 20,000. Okay,
so you're saying there will be a slowdown and then stimulus will kick back in, driving riskier asset prices up. But like, where does this all end? Like this just like stimulus after stimulus and like inflating of assets. Like to me, it seems like everything is in a huge bubble: housing, equities, crypto.
It's not a bubble if you look at it in the right terms.
Okay.
So I stumbled across this. Gold is the great price anchor, right? Everyone's used gold as a relative asset pricing forever as a system of money. Real estate versus gold is about in line. So it's kind of at fair value. Equities versus gold, pretty much at fair value. So then it makes you think, why are we thinking everything's a bubble? And then I realized what was going on is that the central bank printing was devaluing the purchasing power of fiat currency, but against these rare fixed assets.
What you're seeing is all of these asset prices seem to be in a bubble and inflating, and that seems to be that way because fiat money is eroding, like it's
correct
depreciating.